Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. An interesting one, to say the least. When prices go up, not everybody's making money, and we can see with commodities today, some are starting to lose their shirts. I want to talk about oil's importance today, number one, but I want to connect that in with something that is really critical to understand. And that will be part two, which is the markets collapsing internally. And I'll show you what I mean by that. The third thing is to watch bonds carefully. What's happening with bonds should be on everyone's minds as well. And the fourth thing I want to look at is real estate's key indications that are happening today. I'll give you what you need to know and more. Let's begin. Here you can see what's happening with oil. The price is rising. Looking at it just right now as I record the video, it's at approximately $114, $115 a barrel. This has been extremely volatile, as you know, but this is something that is key. It is so important to the global economy as a whole. So watching it is like watching a barometer of the health of the economy and potentially some of the problems that happen all along. The headlines about high oil and gas prices seem far away from products like plastic wrap or lawn fertilizer. In reality, though, these everyday items need hydrocarbons to get made, and all across the supply chain, the struggle is on over who will bear the burden of higher costs. Oil trickles down to everything. And I think it's really interesting to break it down because you say oil. I mean, that one word or the current price is such a small piece of the total puzzle. As I showed you and have always shown you, when we talk about any particular commodity, you could see where it goes or comes from and where it goes to. That's one aspect. But what about the components that are, everything that's made from these things? It's really interesting. While many people feel the impact of high crude oil prices mostly directly at the gas pump, companies in obscure corners of global supply chains watch the daily gyrations just as closely. They're talking about plastic containers, they talk about all of this. But understand that the components here are seeing like higher input costs means higher prices for you, okay? Long-winded responses all the time coming in here. So if you want to read more about that, this is it. But that's the point I wanted to make as we get into this. So I've talked about this a little bit before, talking about how we're seeing margin calls at these different commodity trading, commodity traders are experiencing that today. Salman at Trafigura said that the ruptures to commodity financing would feed through consumers. Quote, "We are already in a vicious cycle on the futures market. I want to stress the impact that it will have on the physical market. We are more and more engaged with governments in order to inform the governments of the likelihood of market disruptions, meaning stockouts of certain products in certain regions." We must be aware of what's happening today. This is coming out of the Financial Times. They are looking at what has happened here. Look, they get into it more. Trafigura's finance chief warns of commodity industry stress. Energy crisis could push smaller operations out of business and unleash a wave of consolidation. Along that, we see failures. Along that, we see disruptions. And this has reverberations in the market itself. This, I'll just read what's pointed out on the right-hand side. The 4-page letter from the lobby group, the European Federation of Energy Traders, pleading emergency liquidity support in full. EFET represents the top trading houses, oil companies, and utilities. Important, to say the least. So the highlighted portion, I won't read you the whole thing. Highlighted portion is really key to understand. Quote, "The current extreme market conditions lead to liquidity shortage, which endanger the functioning of European energy markets." But of course, that applies everywhere. However, market participants, clearing members, and the clearing houses are currently encountering major challenges in managing the impact of the current geopolitical situation. They're not dealing well with this. So they're failing and they're saying to the government, help us out. Since the end of February 2022, an already challenging situation has worsened and more energy market participants are in a position where their ability to source additional liquidity is severely reduced or in some cases exhausted. Saying, you know how this works, right? It's all debt. Everything is all debt. But what about when that stops flowing? Then you got a problem. Initial margin brackets collateral requirements have increased by circa 6 times within the last 4 to 6 months. Market volatility has led to the average amount of variation margin required increasing by 10 times from one business to the other. This is what's happening right now. Margin calls, big problems in the commodities world right now today. So this is just showing us what's happening with nickel. You saw the price of nickel go up so high, they had to halt it. They had to say no more. LME is now a criminal enterprise hiding behind manifest incompetence. Don't be fooled by the horrendous stupidity below. That's a mask. Think of all of the epic incompetence, and then it goes on. Okay, look at this. Disruption event, nickel official prices. They're basically saying right here in highlighted portion, all agreed trades during this session will be null and void. This was dated March 23rd. So LME is basically saying, hey, remember that trade you put through at this price? Yeah, it's not going to happen. Things are getting crazy and it extends out further. It's not just oil, it's not just nickel. Look, lithium prices have nearly doubled in 2022 amid insane commodity rally. Crazy. Now, you know that lithium is very important as it relates to the electric vehicles. There's high demand based on that and other things as well. And you could look at, I don't know if they mentioned it here, I read through it previously, but one article mixes in with the other. You know that, of course, Ukraine, Russia, big time base metals prices coming off their recent highs. And in the case of aluminum, copper, and tin, all-time highs. And then it just goes on to talk about the implications of the Russia-Ukraine crisis for metals, something that I've talked about previously. Oil stocks negatively correlated to the market first time since 2001. So the dot-com bubble, this happened. Here we are again. As we watch oil going up, what happens to the market? Not so good right now today. It's interesting, to say the least. Energy index correlation to the S&P 500 goes negative for the first time since 2001. Russia stock market to partially reopen on Thursday. Interesting, right? And they're saying something else. Exchange could ultimately split into separate markets for foreign and local investors. Now, there were a lot of limitations put in here, and they were basically saying, okay, foreign investors, you can't sell stock. If you bought local stock, you can't sell it. So there were these things, they halted the trading, things got really out of whack, and potentially because the ruble kind of hit bottom and it has come up quite a bit since. So anybody who bought that dip, probably doing very well right now. But again, very risky, right? This is just showing us what, all of that chaos and the mess that's coming from all of this. This is now the worst drawdown on record for global fixed income. Bond market sending major signals today. Worst inflation in decades is hammering fixed income markets. Stagflation risks are leaving credit particularly vulnerable. You know that what we are seeing right now with the Federal Reserve and other central banks around the world have created massive dislocations and distortions. And is anybody surprised about what we're seeing? All right. Before we move on to the next section, don't forget to hit that thumbs up button to support this channel. Look at this here. This is the big one. I've shown you the yield curve inversions taking place. This is the big 2 and 10 year. It has officially inverted. Every single time this happens, a recession follows. This is interesting. Could it be breaking out of this 40-year-long pattern? You could see, it trades within this range. It moves within this range, I should say. And it's right at the very top. This is the US 10-year yield, by the way. Right at the top, 2.3. Is it going to go beyond that? It would be a major change. Now, we've seen interest rates declining throughout this entire period. Sure, they go up and down, but the trend is down. Could this be a new pattern that is forming? We'll see. Higher income America, by the way, nobody is ready. Financial markets, that is, they're not ready for that potential to break out, to create that chaos. Higher income Americans are getting nervous about the economy. You could look at the consumer sentiment right now. Unbelievable. Look at what's happening with home prices. We'll talk about that in a sec. Looking at everything going up. And do you think that this isn't going to affect higher income Americans? Of course it is. If someone's making $100,000, what do they do? Okay, if they went from $50,000 to $100,000, what do? They get rid of the Honda, they buy the BMW. They get rid of the condo, they buy the house. Okay, all of these things are happening all the time. What's happening with real estate here? Take a look. Single family inventory and supply. This has been just falling. And, certain areas, it's not so bad as others, but there is a, housing shortage. That's what they call it. But certainly inventory has dropped. A lot of people are kind of waiting. There's a wait and see moment that's happening now. Interest rates are rising, and some people are just saying, I'm going to wait it out. Some have scooped up what they could, certainly, but sales are, in many categories, are not at record highs, that's for sure, in terms of the total amount of sales, not the prices. Housing completions and under construction, I thought this was interesting because this has gone up quite a bit over the last several years as a lot of the homes that were built leading up to the housing crisis were finally becoming occupied, or at least investors were buying them up. And then you look at the problems with the supply chain and everything, and the prices of lumber and all these other commodities, ultimately putting more pressure on the situation. Housing authorized, not started. Builder backlog has surpassed the peak of the housing bubble. Another interesting one, to say the least. And last but not least, my friends, Evergrande situation continues to unfold. Evergrande bondholders threaten to sue after being blindsided by $2 billion claim. Restructuring of highly indebted Chinese developer comes as property sector suffers a slowdown. This continues to unfold. And I just wanted to make this very clear because I've been called every name in the book, as you know. This is the Financial Times. Evergrande's collapse. Quote, Evergrande's collapse, which represents the biggest debt restructuring in China's history, comes as a slowdown in the real estate sector poses increasing financial and political risks to the current government. When I say something, I'm quoting. In this case, I'm quoting Financial Times. It might be Bloomberg. It might be CNBC. It might be some analyst. When I use the word collapse, it's right here. Anyway, I'm not going to go in that. I just say thank you to all of those for your positive messages in the comments on the previous video. I'll leave it at that. But I just want to show you that Evergrande collapse because I've been, let's not go there. If you appreciate the information, hit that thumbs up button. I want to thank you for tuning in today, and I'll see you tomorrow. Take care.